joining us for a closer look at today's market developments is Thami Netha from Shiloh Capital. Thami, thanks so much for helping us out on a last-minute case. Let's kick things off with news out of the U.S. We got those ADP, or the job opening numbers rather, declining in July and falling short of market expectations, indicating that, you know, that labor market is showing signs of cooling. Considering that print, do you expect the Fed to cut rates come the 17th of September, or are you hanging 10, waiting for tomorrow's U.S. non-farm payrolls?
I think the Fed was going to cut the rates. I think although they did add 73,000 jobs, that decline from an estimated 120,000 is quite sizable.
Yeah.
So I think, and also the political pressure around the Fed, I think we're going to definitely see some kind of rate cuts. I also think if you look at where the dollar is right now, it's weakening, commodity price sort of rise, particularly gold. This would lean towards a cut.
And are you watching what's been playing out in the U.S. when it comes to tariffs? I mean, last week we heard from a U.S. appeals court really ruling that the U.S. tariffs, the reciprocal tariffs in particular, are illegal. Today, last night rather, U.S. President Trump coming out saying, hey, if these tariffs are cancelled, there'll be dire consequences for the economy. You know, they are now approaching the U.S. Supreme Court, really applying pressure there to get that ruling overturned. What have you made of what's been playing out there? And have we started seeing, I guess, that filtering through to sentiment, or is sentiment really just being driven right now by those jobs numbers and expectations of a Fed cut?
Well, I think the thing about tariffs is they are always, the cost of them is always passed on. So if you add tariffs to goods coming into America, Americans ultimately feel the price of that. And that generally has an impact on demand. So there will be some sectors of the economy that will begin to push back on these tariffs because of the cost adjustments.
Yes.
And in some cases, those cost adjustments are significant. So in terms of the global macro strategy for the United States, yes, canceling those tariffs will take them a lot of steps back and will add a lot of policy uncertainty. But any form of sort of tariff or any form of economic activity that adds costs to products will always have a pushback from the domestic market.
And I mean, you see it in the company earnings. I recall, what's this? I think it was Walmart that said they're already starting to stomach those costs, but because of its value chains and the good business it is, it hasn't passed those costs down to to consumers. You even see it in the outlooks as well.
Yes, so there's two ways to do it, right? The first is to pass the cost on to the consumer. The second one is for corporates to swallow that expense. And in a capitalist economy, over time, that won't work. It won't work for corporate to continue to take on the burden of costs that are increasing largely by its own state. So there will be at some point a crossroad, and I think these are sort of the emerging fruits of that crossroad. And the act of the Fed will then also compound that.
Yes.
And it will result in some sort of economic, either a stay the course sort of economic policy with domestic adjustments, or there will be some kind of friction that will lead to policy uncertainty.
Yeah, lots playing out on that front, and also impacting us here at home. But talking about news out of the local front, let's get into some company earnings. Sanlam weathering tough economic conditions with new business volumes rising, but we did see a decline in HEPS. What have you made of the 6 months that was for that group?
I mean, double-digit growth in what they call net result from financial services. I think that's a good thing. And the net operations earnings also sort of grew as well, double-digit. I think Sanlam is taking a strategic shift.
Yeah.
The Time Bank joint venture, where they're going to put up that 5 billion loan and sort of going into a quasi banking part of the economy. the 91 partnership. They're now trying to transfer about 400 billion in assets to 91, 400 billion rands in their assets. So that will have some kind of impact as well, because it gives them, I think it's about 12% stake in 91. And then the Alliance Africa, that's Sanlam Alliance partnership as well. So they're really trying to put themselves with the right people in the right groupings and focus on core business. So the asset management they've given to the right people,
Yes.
The underwriting to the right people in Alliance, and then what is quasi-banking, so non-banking banking, they are partnering with TymeBank. So they're sort of moving away from anything that's not core and giving that to somebody else in their partnerships and focusing on their key strengths around insurance.
And talking about restructuring, shifting and changes, let's take a look at what's playing out in the mining sector, with Valterra making headlines yet again, the group managing to kind of completely unwind their stake in Valterra, gaining about 44 billion rands for that. Of course, that part of its restructuring process, where it looks to retain only copper and iron ore assets. Talk to me about the pivot that we are seeing in Anglo, and we can also chat about De Beers, which is really proving to be hard to sell in this market.
Yeah, I think all this, remember, was predicated by the BHP takeover. So BHP indicated the kind of value that lay in Anglo. So Anglo started seeing the value, especially around its PGM or platinum assets. And post that, decided to actually take advantage of that. So they went out into the market, created a new vehicle for the formerly known Anglo Plat, and that went public, and they now have sold their last bit, which is a sizable amount, about $2.5 billion. So it's a sizable amount they now have in the kitty. It basically marks, call it, 100-year history with PGMs that Anglo has held, and they've exited that. So the rationale now is to focus on, I think, what they consider will be the future market. So copper, which is key to green transitions as a metal. Iron ore, I think, will always be involved in global industrialization. And then they also are moving into crop nutrients, which is also a long-term play on global food security. So I think they've really, they're transitioning their resources play towards the future. And it's going to take time. There's going to be a bit of shaking. For example, they're struggling to get rid of the Australian core assets. And as you're saying, the demerger of De Beers is also proving to be difficult as a diamond miner. So I think there'll be some struggles, but they're really looking at the green economy and the future, and exiting what they would deem historic commodities.
All right, let's hit pause on the conversation. Before we move on to your stock pick, let's take a moment to touch on what counters your industry peers are watching closely.
They make ammunition, they make all the hard stuff that was on show yesterday with Xi when he had that parade, accompanied by little Kim the Rocket Man, and Mr. Putin. And all I'm saying is that when you looked at that parade, I think every European country is going to get envious. And NATO is putting pressure on them to increase their arms and defense and defense systems and so on. And I think it's real. I think the spend that we're going to see coming out of Europe, starting with Germany, is going to push up Rheinmetall up, pretty well. Listen, this is a company that's, I don't know, it's up 190% already this year. But believe it or not, there is upside. So if you like companies that make bang bangs, well, this is the one.
My offshore pick is Universal Music Group. They'll give you the music, got a great collection of artists and a beautiful catalog. It's the kind of business you just don't get here. So a massive moat. Obviously, digital music and streaming has changed the nature of it, but I think Universal Music Group is a very, very well-placed business. And then locally, when I look at ABSA in the 180 Rand mark, it's going to deliver, about $29 worth of earnings, dividend yield is 7%. It almost feels offensive. So I think your margin of safety is very, very big there.
All right, so in Graham fashion, he picked two picks, going with an international one being Universal Music Group, as well as a local pick, that being ABSA. And then David went with Rheinmetall. You can choose from the three which one you'd like to comment on.
I think I'll go with ABSA. I think they've got a good yield. Now, I think it's about just over 9%. And I think in terms of the banking sector, I think they've really narrowed down and focused. They've got good activity in other African markets. And if you're an income-focused investor, I think ABSA would be a good buy.
And they've been poaching talent, hey? I feel sorry for Standard Bank.
Yes, so that's the downside, right?
Yes.
Of having a few big organizations. A lot of talent sits in some of them, so you have to then go and acquire it over time. So I think both institutions will do well.
Okay. All right, let's get your pick. Where are you seeing value at the moment?
I'm seeing value in education. So Advitech, I think there's some structural growth, especially given what has happened with QO now. I think there will be a view of, call it education and secondary and tertiary education. I think a close competitor to that will continue to be the PSG team. I think with Stadio, I think they'll continue to compete. But at this point, I think Advitech is a good pick for structural growth.
All right, let's leave it there. Thami, thanks so much for your time and taking us through markets activity at midday. Now, that was Thami Netha from Shiloh Capital.